In investing, what is comfortable is rarely profitable. The art and science of contrarian stock picking with S Naren on the Wizards of Dalal Street. Naren, let's move on to contrarianism, which is the hallmark of your investing style. So let's explain that to our viewers. First, let me ask you a question. Have you heard of someone, have you used WhatsApp?
Yes.
Yeah. John Coombe was the guy who, designed WhatsApp, and he claims that he designed it because he wanted to call his father in the Ukraine and didn't have the money to make a call, and spawned a $20 billion empire as a result of that. That's his story. What's your story about contrarianism? How did you get into that?
In 1989, when I passed out of IM, I started looking at the secondary market, and I had a absolutely phenomenal investing experience between 1989 and 1994.
Everyone is a genius in a bull market. We had a great bull market at that time.
I was a genius growth investor who could make huge money, who could think of good ideas which were multi-baggers. I always believed that by being an MBA degree holder who knew how to look at an annual report, I had information arbitrage and I could make money off it. That I would make money so quickly in that boom was not something known to me. But when I made it, obviously you get drunk and then you make mistakes. Then you emerge.
What was that mistake?
The mistake was, I thought that the foreign investors were very smart. There were a number of companies in 1994 like NEPC, Micon, SPIC. Many of these companies, they did GDR issues.
A dishonor list, if you will, sometimes.
I don't want to mention that. I thought that I was buying some of these stocks at 1/3 the GDR price. And I felt I'm doing investing much better than the foreign investor who invested at 3 times the price. Then after that, I lost 90%. And here I was in 97, not knowing after the Asian financial crisis why I lost so much of money after being so smart. So that led us to a team of friends who had all made the same mistakes.
The team of friends were a group of fellow investors in Chennai, right?
Yes.
That influenced you a lot. Just tell me a little bit about that.
Yeah, actually that group, were all people who needed, in those days I would call psychiatric help, because all of us had lost money in the 94 to 97 period.
Right.
So we all needed support to know what mistake we made.
And looking for answers.
So we got into this group. When we entered this group and then went about the process, we realized that you can't be a momentum investor in the long run to make money. You need to know when to buy and you need to know when to sell. And most of the time when you want to sell, the others should be interested in buying and you should be interested in not buying. So that's how the whole concept of, I would say, contrarian thinking came. And for which our first experience was 1999-2000.
The tech bubble.
The tech bubble, when we saw stocks like Global Tele, DSQ Software, Pentamedia. Pentamedia was a Chennai
stratospheric heights.
Yeah, and
they were the most celebrated stocks.
And we had to avoid them. And most people around us said, these people have more than 10 years experience in equities and they're saying these companies are useless. We are making money. But contrarian investing said that we have to look at the stock and come to a conclusion. We were negative on many of them.
Right.
So contrarian investing helped us to stay solvent. First, we were considered irrational in 99-2000.
You didn't get it.
We didn't get it. And then we realized that we were solvent when the others became insolvent in 2001.
But it's painful to hold through that kind of a bubble rise, right? Being a contrarian investor, Buffett was one at that time. And every day the stocks rise and your stocks fall. So how do you handle that intellectually?
I think it is very easy when you're managing your own money. But in 2007, I was running funds which many of them underperformed the benchmark in 2007. Out of the same streak of what I call contrarian investing. And when you are handling other people's money and you're underperforming benchmarks, people came to me and said, you're running value discovery, but why are you not able to beat the benchmark? And I said, the contrarian investing style and whatever I had learned in investing over 17 years told me that you have to be careful and I'm going to avoid the infra names, although I was running the infra fund then.
Right.
So
because they made no sense. But when you do contrarian investing, it's not just about being different from the crowd. You want to find triggers for a change, right? So how do you assess the triggers in a sector that you like?
But sometimes the triggers in 2007, frankly, we never knew that there was a global financial crisis coming. And towards the end of 2007, as the markets kept going up, we didn't know what that trigger would be. But our 99-2000 hat definitely told me that something will happen.
The end is nigh.
When will it happen? I don't know. But 99-2000 told me that you have to, it will happen. And you won't know the reason. And
You look for anecdotal evidence that the public starts coming into the market, people talk nonsense. Is that some of the checklists of a bear market?
Clearly of a big bull market. In that period, I had analysts coming into my room and telling me the stock looks very cheap on 2014 earnings.
In 2008. That triggers a bear.
That clearly triggered a bell. And market caps. In that period, there were market caps which were astounding. If you look at some of the companies then, like some of the real estate companies was higher than the entire pharma sector.
Correct.
So my contrarian...
A power company was more than the entire FMCG basket, I remember. Yeah.
So those market caps don't lie. You know, earnings can go up cyclically, can come down cyclically. But market caps gave me the best reasons to stay rational. But it was tough.
Price is what you pay, value is what you get. To ad break, we have to go. We'll take another ad break, come back and chat some more with S Naren, CIO, Prudential, ICICI. The other way around, ICICI Prudential.